all of my LLCs are disregarded right now. And I'm in the process of setting up one LLC to be taxed as an S or a C Corp as management for all my other LLCs. What are some of the write-offs that I get before 12/31/23?
Well, one thing we need to put out there is you normally can't start writing off stuff that happened before you had your entity. Now, there is the exception for certain startup expenses. You don't have as many to choose from in an S-Corp as you would a C-Corp. And there's organizational expenses. So like the cost of setting up the S corporation is an organizational expense. That will be, you'll be able to write that off.
Let's hit some basic real quick.
Okay.
When you see LLC and you hear disregarded and you see LLC taxed as a S or C Corp, I just want to make clear, the IRS doesn't know what an LLC is. They go like this. I don't know what you got. Tell me what you got. Tell me what you got. And then you say, oh, it's just me. That's disregarded. Or, oh, it's a partnership. Or, oh, it's an S-Corp. Or, oh, it's a C-Corp. You do this on an SS4. And if you do an S-Corp, it's a 2553. But you're just letting the IRS know what it is because they don't recognize an LLC. So when I see disregarded LLCs, that tells me somebody is probably doing real estate and they probably want to have it one LLC that is taxed as an S or a C Corp to collect rents and to gather expenses. That's what it's telling me when I see this. You agree?
Yeah.
All right. So now we have these LLCs that are doing real estate. You get deductions on your ordinary and necessary business expenses on those.
Yep.
So it's not like you lost out. But now we set up an S or a C Corp before the end of the year. Does it trigger anything special that I get to write off? And the answer is probably not, right? There's $5,000 for startup expenses, $5,000 for organizational expenses that you can grab lickety-split and reimburse yourself and write off. But it has to have income,
yes,
to really get a benefit out of that.
And I'm not sure if you agree with this, but I'm not crazy about having an S Corp as a management company, especially if it's managing real estate. Because then any management fees just create passive losses, most likely, and ordinary income at the same time, which both end up back on your 1040 with an S corporation. So that's why I prefer the C corporation. Like I said earlier, there's actually more deductible items.
What about double taxation? My accountant has a heart attack and immediately starts saying, oh my gosh, you're so dumb. You set up a C Corp. It's double tax. What do you say to those people?
There's so many things you can do. I mean, there's times where dividends are applicable. You can pay a salary out of that S Corp or C corporation, so you don't get hit with double taxation.
But let's be real, 80% of C Corps zero out, at least.
Yeah, and thank you. That was the other thing I was going to say is you can make your management fees pretty close to whatever it is you're reimbursing, and the C Corp never makes hardly any money.
And then what Jeff said about C Corps get more deductions. C Corps, assuming you don't have another company that's a C Corp with a bunch of employees, right? You can't, we have discrimination rules, but assuming that this is just you and it's, hey, this is my family and I have a W-2 job or something, I can write off 100% of my medical, dental, vision expenses for myself, my family, anybody who's a dependent of me, including my parents, if they're dependents. I can write off all of their medical. And like we've seen, what, $25,000, $30,000 medical expenses reimbursed out of a C Corp, 100% deductible to the C Corp. You don't have to report it as an individual. It's under an accountable plan. Plus, you can do administrative offices and get another $5,000, $6,000 a year tax-free. Plus, you can do 280A, which is this Augusta rule. If you've never heard of it, stick around. We go over this in a lot of our courses. There's a whole bunch of different deductions that are kind of sneaky deductions that are available to corporations that are not available to you and me. And it's because when you have an S or a C Corp from a tax perspective, so it can be an LLC tax as an S Corp, LLC tax as a C Corp, you can be an employee, which means you can have an accountable plan. And that sounds like Greek to you. It just means your company can treat you just like if you were working for Boeing or something else. They can reimburse all these expenses and cover these things for you. The company gets to write it off. You don't have to report it as income.
So yeah, if you have an S corporation as a management company, I would say it's highly likely that you're going to have more personal income than if you had a C Corp managing your company, your entities.
Fair enough. And then what Jeff said about the C Corps is if they do show profit, they're taxed at 21%.
Mm-hmm.
And if they pay that profit out to you, you pay long-term capital gains rates on it. It's called a qualified dividend. So it could be at 0 anyway. So everybody always says, oh, double tax. Realistically, it's not so bad a thing anymore since the Tax Cut and Jobs Act came out. It used to be really bad when dividends were ordinary income and the corporate rate could be as high as 39%. You're getting nuked at that point. And that's where most accountants got trained. It's like, oh, they're bad. They didn't actually do the math. When you do the math, it's not that bad anymore. And Jeff also said something really smart, which is you can just pay yourself a salary. Like worst case scenario, you're sitting there on the C-Corp and you're running, you don't have to work for free. You can pay yourself a salary and get it out. So you're no worse off, So if you're making ordinary income and you'd have paid tax at ordinary income rates here, we can still get it back out to you. Or if you're really scared of that C-Corp, do an S-Corp. Quit worrying about it. Don't stress yourself out. Let yourself sleep at night, right?
Right.
Whatever works for you, but it's got to be your decision. We shouldn't just default to your accountant's decision. Anything else on that, sir?
No, like you said, a lot of the old CPAs are stuck on C-Corps are bad, especially the smaller ones.
C-Corp bad. Because they don't want to learn how to use them. No offense to there's probably some CPAs out there that is pissed off. I'm sorry. We learned certain things, even in lawyering, you learn certain things like, hey, in order to be a C-Corp, you have to meet all these different tests. And then they do the check the box regs and makes it a moot point. So we all learned under one system and then the Congress changed it. So I still think that somebody says, at any point, does an S-Corp make more sense than a C-Corp? Absolutely. When you need to live off the money and you're going to be taking it out anyway, then we can avoid employment taxes on about 2/3 of that money, Horace, if we're taking it out. So there's lots of reasons. Oops, I'll go back to this question. There's lots of reasons why you might do an S-Corp versus a C-Corp. And sometimes you do both. Like there's nothing that says I can't have family management company over here, consulting, dental practice, medical, whatever the other business is, construction company, electrical contractor, whatever as an S, real estate. Maybe I'm a realtor. Maybe I'm just have a management company that I'm, doing certain activities and I have a C-Corp that's managing stock accounts or something else, right? I could actually have both. So yes, you can have the best of both worlds and you can have your cake and eat it too. I'm thinking about cake. Cake. Wait, darn it. Cake. Sometimes I'm not quick on the draw. Hey guys, if you like this snippet of Tax Tuesday, then I invite you to click the link and actually subscribe to become a Tax Tuesday member. Every other week we do these live and you too can ask your questions and myself and my team will answer your questions on the next Tax Tuesday.